Welcome to Access a Trader, the #1 community for high-level traders to learn valuable trends and strategies, connect with other top traders, and become consistently profitable. Click the link in the description of this video to receive a special offer on our revolutionary PS60 training, access to our daily chat room filled with experienced traders, and so much more. Space is limited, so make sure you don't miss out. We look forward to seeing you in the room.
Hey guys, good morning everybody. Welcome to another edition of the AccessATrader.com weekend update show. Hope everybody is doing well. First and foremost, again, I want to thank everybody for their great contributions, great efforts in the live webinar. You guys are just absolutely awesome. But more important than that, you guys are great human beings, which makes things a lot easier to deal with the day-to-day grind. First and foremost, again, part two, I want to wish everybody a belated happy Thanksgiving. Hope everybody had a great Thanksgiving day. And again, at the end of the day, when it comes to this crazy thing we call life, it's not appreciating 1 day out of the year. It's appreciating just life. The fact that we are here together, the fact that we are, we are having healthy dialogue and trading the markets together. This is a blessing. We're alive. We're healthy. We're able to do things that many people wish, and that's just to breathe, just to wake up every single day. So we really have to, as just human beings, just take a step back and really enjoy life, because just when you turn around, it's going to end very, very quickly. Hopefully not that soon, but you kind of get my point. So let's talk about the market. So I've always been saying this. I think we're in a very soft society. I really do. I think there's too many 8th place medals given out. I think majority, because we are such a soft society by nature, everybody's coddled, okay? Everybody is trying to be bubble wrapped at all times, and nobody wants to ever hear the truth. And when it comes down to the market, right, when it comes down to the market, we usually don't want to see what's actually in front of us. And the problem with that is it kind of ends up the same way. And again, if you've been following us for a very, very long time, even in the last 2 months, you kind of know where we stand, okay? We've been sell biased this market pretty much for the last 2 months. And the reason why is pure technical analysis. Nothing to do about trading pivots or my process, your process. It's just the idea that technical analysis has no bias, doesn't care about your background, doesn't care about how good of a person you are. It's going to do what it's going to do based on natural order flow. And when we saw this double top here, we started saying, hey, not to say it's going to be Armageddon. Nobody ever did. This is all about the idea that a healthy back test is going to happen. Again, if you believe in the theory, like I do, that stocks trade from supply to supply and demand to demand, then you believe the stock market was going to go lower based on technical analysis. So we hit the 50-day, no big deal. We hit the 100-day, no big deal. And then things started becoming a big deal, especially from the perma bull point of view. And now we're all the way here, all the way here. And a couple of weeks ago, we did the whole, actually a month ago, we did the whole thing. Well, what's going to happen now that we're, nice and cuddled under the 200-day moving average? Again, basic technical analysis. Again, you don't need to trade the PS60 theory to figure out that building under the 200 days is incredibly bearish. So I don't get the whole fact that people will not acknowledge that this is a bear market. Again, back test, pullback, President Trump, pause, correction. Again, bear market, we don't want to hear it. We are living in a society of coddled 8th place medals, guys. And until you wake up and realize exactly what's in front of you, you are going to feel the ramifications after the fact. You don't need to happen, okay? Little Jimmy that gets his 8th place trophy can't possibly live his life to say, that's okay, I tried. Eventually, results have to play out. Little Jimmy can't go into his next competition or into his next phase of life thinking that it's okay. At the end of the day, I'll still get that 8th place trophy. It's okay. Everything will be okay. Eventually, little Jimmy grows up to be big Jimmy, and little Jimmy is an adult now. And now, all the things that he was coddled with, right, from the time that he was small, and again, getting these 8th place trophies, he thinks life is going to work that way. Unfortunately, life doesn't work that way. Life is a very, very harsh reality that if you don't put yourself in a position to succeed, if you don't put yourself in a position to thrive in any kind of global macro event, which it could be being an architect, being a plumber, being a scientist, or hell, even being a trader, right? Things are going to work out to your detriment. And that's exactly what the perma bulls are facing right now, okay? Nobody wants to acknowledge that we're in a bear market, okay? I don't care about the technical words, 10% off the highs or 24% off the highs. You can clearly see it, okay? It's so plain as day that you don't need to be the most amazing technical analyst to figure this out. When you're looking at charts, right? When you're looking at charts and you're looking at the macro view of charts, okay, number one, you can figure it out. I could ask my 9-year-old daughter, is this going higher or lower? She's going to tell me it's going lower. She doesn't need to know anything about this, okay? You could see it with your eyes. It's going lower. For the little bit more advanced trader, right? Look at the 60-minute channels, okay? You could see every single 60-minute channel. These are charts of all beta names: Tesla, Amazon, Alibaba, NVIDIA, Netflix, so forth and so on. They're all either going down in a linear cycle, okay, or every single time they pop up, right? Pop up, pick their head up, hit supply, they come back up. Pop up, hit supply, come back up. Pop up, hit supply, go back down. Pop up, hit supply, go back down. Pop up, hit supply, go down. And again, there's another 12 to 15,000 stocks that are doing the same thing. So if you're a perma bull, okay, again, I don't care what you call it. If you don't want to call it a bear market, don't call it a bear market. Again, like I said, a week ago and 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 a week ago, right? You can put lipstick on a pig, it's still a pig. So you have to find an area at some point in life to wake up and say, well, wait a minute, maybe my reality is not that rosy. Maybe buying breakouts is not working. Again, raise your hand if you bought a breakout in the last month that has worked, right? Goes up 30 seconds, 40 seconds, 3 minutes, and it comes right back down. It's not that it's a failed breakout. There are no breakouts in a bear market or a pause market or in a correction market. Okay, whatever you want to call it, we are in a bear market. And until you realize that, you know what, there's ramifications of being a perma bull in a bear market, you are going to find yourself on the wrong side, right, of the ledger. It's just common sense. And unfortunately, because so many traders, their only exposure, okay, when they started, the last 2-3 years, the only exposure they had into the stock market is these dream-filled sugar plums dancing in your head scenarios that the stock market is easy, it always goes up, the bears never learn, buy the dip, blah, 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 blah. You could buy a $2 stock, it'll go to 10, everything is great, I could trade from the beach, and then they realize, once again, they're holding the 8th place trophy, okay? You don't need to be a victim of the markets. You really don't. I don't care what you trade. You could trade pivots. You don't have to trade pivots. You could trade options. You don't have to trade options. You could trade Forex. You don't have to trade Forex. But again, don't think for a second that your only exposure, especially if you're a new trader, your only exposure to the market is these small cap stocks that 99% of them get pumped. Okay, 99%, I don't care what you say. 99% of these stocks get pumped, okay? And all that you're doing is playing musical chairs. Again, when you're exposed to an area of the market that is all retail, okay? It's all retail. Small cap stocks are all retail. Cryptocurrencies, all retail. All these things are all retail. And if you go through history of what happens to retail, they always get slaughtered. Retail is the first one. They're like the pawns. They're like the pawns on the chessboard. Who goes out in the front, right? Who goes out in the front of the battle? It's not the king, it's not the queen, it's not the rook, right? It's not the crook, it's not the knight. Okay, who goes out? It's not the bishop, it's the pawns. Retail is the market's pawns. And what happens is every single time retail gets exposed to anything, it always winds up with the 8th place trophy. It's just the reality of life, and it's the reality of trading. You don't need to be a victim, guys. There's a whole universe of stocks out there. Okay, you can trade so many different vehicles, but again, unfortunately, new traders, they all have one exposure. Small cap stocks, small cap stocks, small cap stocks, small cap stocks, millionaire lifestyle, Forex lifestyle, all this bullshit, excuse my French, but that's what it is. All this nonsense has nothing to do with trading, and you're still sitting there where you started a year, 2 years, 3 years go by, and you're still doing the same thing, and you're still trying to, really squeeze water out of a rock. And unfortunately, the stock market, for the rest of us who actually trade for a living, it's not that simple. Okay, it's not that vanilla. There's so many moving parts. And right now, if you are a new trader and your only exposure is to these small cap stocks, again, raise your hand if you've made money in the last month, 2 months, 3 months, 4 months trying to buy these breakouts. They only work in the most rabid bull market. And again, at the end of the day, you are chasing somebody's, whatever they want to call it, alerts, schmalerts, whatever it is. Again, you don't need to be a victim, okay? Especially in a market like this, which is, again, indirectly the best thing that could possibly happen to you, because it actually shows you how vulnerable you are to the global macro universe, okay? And when the stock market really, puts down Thor's hammer and shows you who the boss is, you have to have a process. Again, it doesn't need to be my process, okay? What works for me might not work for you, okay? If you have a $2,000 account, you can't trade with me. How are you going to trade Amazon with me with a $2,000 account? It's just not going to happen. But at some point, you have to figure out what is your place in this macro universe? How can you avoid being the person who is accepting that 8th place trophy? At some point, you have to get over that. You have to get off that carousel. If you're not getting anywhere the first 2, 3, 4 years of your trading, you have to accept there's a better way out there, okay? And until that happens, you are going to keep on accepting that 8th place trophy, and you're going to be going around your proverbial carousel. And unfortunately, you're going to get off, but it's not going to be because of your choice. It's because you run out of funds. So again, guys, for all you new traders out there, do your homework. There's a whole macro universe out there of stocks that you can trade. You don't need to be the prey. You don't need to be a victim. You don't need to be sitting there and wait for some guy to give you an alert to buy a $2 stock up 850% for the day. It's just too hard. It's just way too hard. Again, I tweeted this out a couple hours ago. The easiest path to the goal line, okay, is the one with the less resistance. Okay, it's not the sexiest, but it's the easiest. And as us traders, we're always looking to the easiest path, not the sexiest path, but the easiest path. So do your due diligence, find out there is a whole macro universe out there, and put yourself in a position to succeed, not in a position to accept an 8th place trophy. So going to the market, pretty solid week. It got a little thin towards the end of the week because of the lack of market structure, because of the lack of market participants. It's very, very obvious. Usually in a holiday shortened session, you're going to have less market participants because, again, people are traveling. It's the busiest time of the year. And when you have a bear market, yeah, I said it, when you have a bear market, you're going to have that much less active market participants. So it's very, very easy to at least understand that you will have bigger spreads, okay, bigger spreads, thinner liquidity, and less market structure because people are gone. And by the way, again, it is a bear market. So what happened this week? You had oil prices continuing to get slammed, right? You had oil prices going down. You had 4% losses all across the board, right? You had NASDAQ, S&P, Dow Jones Industrial. So you had a pretty aggressive sell-off. And we said this last week's video. Again, traditionally, this is the great time of the year, right? Stock prices are always going to rally. Santa Claus rally, Thanksgiving rally, the January effect. Again, we got a month left. And until we start reclaiming macro prices, that's just, again, an area that you are accepting an 8th place trophy. Don't hold your breath. Okay, I said this last week. Don't hold your breath. We're sitting at macro levels. Every single time we rally, we get slammed with supply and we come right back down. For the market to wake up, okay, realistically, for the market to wake up, we would have to reclaim 177 on the Qs. Okay, right now, the Qs are where? 159. Okay, so for the market from the global macro point of view, it's going to need to reclaim 177 to move up. Again, I'm not saying you can't buy stock in between 159 and 177, but you can see these macro channels. 5-day slam, 5-day slam, 5-day slam, 5-day slam, right? Didn't even make it to the 5-day slam. So again, you can see from the naked eye which way we're going to go. So it's very, very hard for you as a permanent bull trader to turn around this weekend and say, let's see what stocks we can buy this week. Okay, it's just a reality. Again, you don't need to believe me. You don't need to agree with me, but that's your reality. Where we're going this week, again, if the bulls don't at least reclaim the 5-day interval and start building off the 5-day. And again, for all you guys who are not familiar with the 5-day, a lot of you guys don't even use the 5-day. For me, it gauges short-term, short-term sentiment. So for us, I mean, the perma bull to have a swinging shot for any type of tradable rally back to the upside, it's going to need to reclaim this orange line. That orange line is at least 161. So you're going to need at least, almost 162. You're going to need to close at least 162 on the Qs for a tradable rally to the 164s. And if it extends an extra day, maybe back to the 167s. But again, these levels need to build. These levels need to be reclaimed. And until that happens, and again, if you look at every single one of these 60-minute channels, okay, until that happens and they start reclaiming levels, we're going to go lower. Okay, like it or not, Dan, you're an idiot. You're a moron. Yes, I'm all these things. I'm the king of the idiots. I'm the king of the morons. But again, reality is reality, and you can take this information any way you want. But again, the most important thing to realize is our reality is a little bit different than the actual reality that's going higher. Let's actually going on. So pretty solid week. Wednesday and Friday were a little bit thin. You can see the volume really shrinking, channels really contracting. But again, I say this all the time. You don't need to trade every single day. Even professional traders have been doing this for a long time. You don't need to expose yourself on a daily basis. I mean, there is some value, sure, there is some value. But again, you know, as a trader, I've been doing this, I've been doing this now almost 20 years. It's me 20 years in May. The one thing I always know, you have to shift gears. You can't go full size in every single trade. You can't go full size in every single interval because, again, the liquidity and the spreads and the macro conditions just won't let you. So for the last 2 days, I've been trading like quarter to third size. I just haven't been trading a lot of size. Like, for example, Friday, you saw $1 spread on Tesla after 10 o'clock. That's ridiculous. $1 spread on Tesla after 10 o'clock is showing you that the market structure is contracting. There's absolutely no reason to ever go in full size when that happens. And you really have to look for value. And again, as much as we want to trade full size and kill it and all these crazy, awesome social media words, the reality is sometimes you need to take a scale back and say, well, I'm either going to trade light or I'm not going to trade at all. Again, you can't push it. Okay, that's the one thing. The market is much more defined than you are. You're not going to beat the market. You're not going to outsmart the market. So don't be cute. Okay, don't be cute. Whatever the market's telling you to do is probably the right thing to do. And Friday, we only had like 3 pivots. That's all it is. And I say this all the time. And it was a shortened session. I say this all the time. You don't need many trades. You don't need to put on 500 trades throughout the day. It's value. You're either going to trade some days 1 trade, some days you're going to take 10 trades. But it's all about how many trades you're putting on correctly, not how many trades you're putting on. And if you look at Friday's session, again, market continued to sell. We only had 3 pivots. That's it. These are, again, we don't pick and choose. We don't cherry pick to show you guys. This is reality. Anybody on the private Twitter feed will tell you that we don't pick and choose these things. These are what happened. All right. This is exactly what happened here. And you could see it. We were talking about TLRY from last week. Okay. If you guys remember, we were talking about TLRY from like a week ago, and it didn't go down. It just didn't go down from earnings. And they had every opportunity to slam TLRY, and they just didn't. And you could just see it, even going back from last week's video. They just kind of just hugging this linear regression line, hugging it. And we talked about 114 being a big level. If you guys remember, even going back to last week's video, there was a sneaky pivot here at 112. It was actually 111.68. But we rounded it off. I kind of rounded off to the whole number. And we tweeted this out. I said, listen, if this thing can reclaim this 112 sneaky area right over here, right? This thing right here, you can see it right here. If it could just reclaim the 112 area and then it confirms 114, it's going to be good. And this was actually turned out to be a pretty decent day. I actually got long at 113. My highest sale was at 117. So it was actually a pretty good trade. I still like it. I think these pot stocks it's actually the only group that's actually setting up here. And we'll talk about that in a few minutes. But this is actually the one group you can see how much room TLRY still has, and something I will be definitely watching for Monday. Tesla, again, Tesla, excuse me, let's start off with Netflix. Netflix build, if it's 259 builds below, can flush. You can see Netflix set up right over here. Again, you can see the dead downtrend on Netflix. Again, here's 259 right here, right? 259, 259, 259. You have 4 candles of 259. So again, that was your line in the sand. And, it went from 259 to like 256. Again, not the biggest trade in the world, but again, there wasn't a lot of value. And this was the big move right over here. This Tesla, okay, I tweeted this out pre-market. And again, these pre-market tweets, a lot of you guys really like trading before 10 o'clock. 333, and that was the big number. That was the big number on the daily. That was the big number on the 60-minute. And once it confirmed, if 333 builds below, can flush, and you can see why. You can see why here on Tesla. Let me show you from the daily point of view. Here's right here, 333, right? You see that 333, 333, 333, and it broke 333. Right? 325. So, not a bad day. Not a bad day at all. Not a bad day at all. Nothing great, but not bad at all. But again, you don't need to recreate the Mona Lisa every single day. I think we'll get a lot more market participants coming back this week. I do believe we continue to go lower. Okay, I think we continue to go lower until the market stops going down. Like for example, TLRY, they had every opportunity to destroy this thing on earnings, right? Every opportunity. Bloated pig, stock went from whatever it was, 20 to 300. And they had every opportunity to kill it when they came out with pretty crappy earnings. And they didn't, okay? And they didn't. And the whole point is, and it's so simplistic in nature when you think about it, whatever doesn't go up, whatever doesn't go down must go up, right? So again, until stocks stop going down on bad news, okay, we will continue to slide. And again, there's nothing macro out there that's going to dictate otherwise. So before you turn around and say a stock is cheap, just understand the reality of cheap versus expensive, okay? Net asset value is the last trade of the day, okay? If you believe the stock is worth 300 and I believe the stock is worth 299, somewhere in between could be, right? Somewhere in between could be net asset value. So there's no such thing as expensive. There's no such thing as cheap. The market doesn't need to rally, okay? Just the way the market doesn't need to go down. We have a 3-year, 4-year rabid bull market. Why was the market expensive after 2 years? Why was the market expensive after 3 years? So my whole point is the opposite. Why does the market, it's only been 2 months. Why does the market need to recover? Why? You want it to recover, right? Your 401k needs to recover. Retail wants to recover. But the reality is until price action tells you we've stopped going down, we're going to continue to go down. So it's very, very important to kind of look for the clues. I personally think, for example, like a stock like Amazon, at least on Amazon, you can turn around and say, well, they're going to release their Black Friday sales and their Cyber Monday sales, and they're going to, they're going to make a gazillion dollars, right? They're going to make $1 trillion, and the stock is going to go higher. All these things are true, right? They're going to make a gazillion dollars. They're going to kill it on Black Friday and Cyber Monday. But why does the stock have to go higher, right? There's absolutely no reason the stock has to go higher. But at least you have a common sense scenario. You're thinking outside of the box. You're thinking realities in dollars and cents. But for the point of price action, yeah, they're going to kill it on Black Friday. They're going to kill it on Cyber Monday tomorrow. But does the stock have to go up? Right? It doesn't have to do anything. This is very, very important to understand that. So again, I am sell biased once again going into this new trading week. Again, you don't need to recreate the wheel. You just don't. Just trade what's in front of you. Sometimes it's going to be more challenging to sit and wait for value because we are so linear. But again, where is our potential bottoming out process on the Qs, right? Look at the weekly chart, right? If you scroll back and look at the weekly chart, at least you can make an argument, right? At least you can make an argument that this supply right here is roughly around 155 on the Qs. Problem is we closed at 159, right? So there's still a $4 spread. That means, you can have that one big throw the baby out with the bathwater scenario and it gets kind of washed out around the 155, or you can have this long, prolonged, just decay of price action day after day after day, which obviously nobody wants to see, but those days are very, very tradable. So at least you have an idea where the market, or at least where the NASDAQ 100, the Qs, can stop. But again, doesn't mean they can't go through, doesn't mean anything, just means measured potential. So let me give you guys some ideas for the session coming up on this week. So let's start off with TLRY. Might as well start off with these pot stocks. So, and you can look at the weekly chart as well. You can see it all lining up here. So look, are these stocks the easy stocks to trade? No, I traded like very, very small size in these things because I'm not comfortable. So for me to sit there with a stock that I'm not comfortable going from 113 to 117 looks fine, right? And it was fine. There was nothing wrong with the trade. The problem was it was very, very thin. The trade's almost like $1 spread. It's very, very tough. So the only way for me to get in and out of these trades are at whole numbers. So it's almost like I'm not in full control. But again, you could clearly see, if you believe in the theory that stocks trade from supply to supply and demand to demand, well, again, look at supply up here, right? Supply up here is the 50-day moving average, roughly 127, 150, 128. So there's room, right? There is room. So I want to watch this thing above Friday's high. You can see the 60-minute flag forming pretty nicely. If it starts building over that 118, 119 level, again, if the market has any strength, why can't you get a move to 127 and 128? It looks pretty good. So definitely keep an eye on that. Look at Crone, C-R-O-N, again, another name in the pot space. Keep an eye on that. Again, same group. You don't need to be very, very creative. If one goes, right? If one goes, they might all go. So again, look at some daily supply. Is this 908 area? If this is your thing, right? It could reclaim 910. It has the same scenario as TLRY. Why can't it go to the next supply zone, which is the 50-day moving average, which is roughly 960? So 910 to 960, there's your 50-cent potential there. And another pot stock, PYX, right? PYX, again, this is coming way off the bottom. And again, if you've been following me for a long time and you know that I believe that the 10-day moving average is the birth of the trade, well, look, it stopped Friday on the 10-day moving average, right? And it put in a high of 1446. Look at the 60-minute view, right? You can see this flag playing out as well. If this thing can reclaim 1450, 1460, right? Why can't it go, right? Why can't, again, if the pot stocks are, if the pot stocks are strong, they move as a tribe, just the way beta does. They move it as a group. So if one's strong, they might be all strong. So keep an eye on that as well. Square had, I think Square had, I think they had March 90 calls traded on Friday. I have to double check, but I think they had March 90 calls traded on Friday. Look at the 60-minute flag. If the market is strong, look at the 64 build. If it could build 64, right, guys? If it could build 64, and you can see it here. If it could build a 64 and confirm 64.50, you could get a move to 66. So keep an eye on Square as well. A couple of shorts. Again, can't have longs. Got to have shorts as well. Look at Triple M. Look at Triple M. This looks like, this looks like once it confirms this channel here, this could get hit. Watch Triple M. If it starts building below 196, you can see all these 196 support areas. If it starts building 196, it could get hit. Look at JP Morgan. Again, these banks are just awful. Perfect double top right here. Excuse me, double bottom right here. 106 is the low here. 106.06 is the low here. You guessed it. If it starts building below 106, you could see 104. So keep an eye on that. And I like Tesla. I mean, I think Tesla goes lower. Again, you guys know me. I have no bias. I buy this thing. I short this thing. I love the stock. I personally believe this is the best trading stock in my career for sure. Okay, there was a lot of really good ones. I think Taser probably was the closest second. Okay, if you guys remember from 2003, 2004ish, it was probably the best one. This is the closest one. Taser's probably the second closest to Tesla. Tesla's just an amazing trading vehicle. Again, it broke the 33, it closed below the 30, it stopped right at the rising Bollinger Band. If this thing reclaims on Monday 325, you have a legitimate measured move to 318. So guys, have an awesome weekend. Again, new traders, just understand there's a whole macro universe out there. You don't need to be anybody's victim. Just do the homework, man. Do the homework. Just realize there's so many other ways to make money than the hard way, like the really hard way, the crowded way, the retail way, the way that you have to think about pumps and dumps and filings and delistings, and there's so many different variables. I would be a nervous wreck as well. I'd be an emotional roller coaster as well. So if that's your reality, you have to just stop. You have to stop the madness and really try to figure out that there actually are other ways that you could be an aspiring trader. Guys, God bless. I love you all. Have a great trading week, guys, and I'll see you all on the other side. Take care, guys.